Hey, thank you for joining us right here on Channel Africa, where you get news from an African viewpoint and Africans speaking on issues of their own continent and also international matters. Thank you for joining us here on African Dialogue, where from Monday to Thursday we host panel discussions to contextualize some of the biggest news items that are coming out of the week. And we know last week the big issue was the resignation of British Prime Minister Theresa May, who announced her resignation as the Conservative Party leader, prompting for an urgent search of a new party leader and the next Prime Minister of Great Britain. May ended her speech in tears after she elaborated how she worked hard to serve the British people. However, sadly, that was considered not good enough, according to her. Meanwhile, jostling for leadership has already started, with former Foreign Minister Mr. Boris Johnson declaring himself a contender for the top post, along former Brexit Secretary Dr. Dominic Raab and Environment Minister Mr. Michael Gove, and many others. Mrs. May had initially met the chairman of the Tories' 1922 committee before coming to the stage at number 10 Downing Street to announce her departure with effect from 7 June 2019. May became unpopular from her cabinet and members of parliament on the handling of Brexit, which had become a thorny and divided issue which sought the country to actually get out of the European Union. Well, to help us on this, we're joined once again by Professor Gerald Erasmus, who is the founder of the Trade Law Center, and we're going to start this conversation with him. And also we've got Lukman Otunuga, who's a research analyst, to give us more of the economic outcomes, and he's a research analyst at FXTM, which is Forex Time. Let me bring in Lukman Otunuga into the conversation. Thank you, Lukman, for giving us your time.
It's a pleasure to be here as always, Benjamin.
I know you can't usually speak on the politics of matters, but I'm sure this political stalemate, especially when it comes to the Brexit issue, is creating a lot of uncertainty in the markets, Lukman.
Absolutely, Benjamin. I mean, even before Theresa May's resignation, trying to predict what happens next with Brexit has been like trying to predict the UK weather, just unpredictable. And this continues to be reflected in the pound's valuation. Now, her resignation certainly does open a can of worms, and it will compound to the many uncertainties over Brexit. Right now, there is a lot of guesstimations over who will replace Theresa May, but as the Kind Sir said earlier, this doesn't really change anything, and whoever takes lead is going to inherit the challenges she left, basically trying to get a majority over Brexit. So right now today, the British pound is under pressure, and it's one of the worst performing G10 currencies. And when we keep in mind that another key thing is the decision to hold a conservative leadership contest, it's going to take roughly 2 months. So we're talking about whoever the new Prime Minister will be will have less than 2 to 3 months to flesh out a new deal. And this would lead to a possibility of the UK requesting for the EU for another extension. Now, it remains to be known if the EU would actually accept this, given the back and forth of the ongoing Brexit talks within the past 3 years. So all this uncertainty naturally is negative for the UK economy. So far, in recent months, economic data from the UK has been mixed, but one thing we have to keep in mind is it's just the cloud of uncertainty over Brexit has really created a gloomy mood in the UK, and this is going to continue to be reflected in the pound's valuation.
Over time, Lukman, you would think that the markets would get used to the unexpected situation and the conditions in the politics of this Brexit issue. And you think they would actually regulate themselves and kind of find a path around this particular matter. Why is this uncertainty creating so much chaos, especially in terms of the pound in itself? Because at some point one would have thought this would be a non-issue, but because it's related to trade, I'm sure that's why it's such a wonder for most investors, for most business people, those within the country and external of the country?
Yeah, as you noted, yeah, with Brexit, one should always expect the unexpected, and because things have been going on for so long, you'd have expected the market to become used to this. But as we report that FXTM, vote earlier in the year about the risks of a no-deal Brexit severely underpriced, and this is exactly what is happening right now, because at one point in time, many thought that everything will be, all rosy, that the UK will end up leaving, with some deal in place. But right now, depending on who replaces Theresa May, right now there's a lot of speculation that it could be Boris Johnson, but it's far too early to come to any conclusion. But if this does become a reality and the prospects of a no deal, materialize, this is going to hit everybody quite hard.
In terms of the unpredictability of this conversation, if this persists, what are the results of the consequences, especially when it comes to market confidence?
So it's very interesting you say this. So the Bank of England, if I remember correctly, a few months back released a very gloomy report on what a no-deal Brexit can have on the UK economy. Well, those predictions are, quite scary. If such becomes reality, we can see something similar. The uncertainty has already been reflected in the pound's valuation. It's reflected in equity markets. Even in the UK, businesses are on standby, getting on standby, waiting on the outcome with Brexit. If this continues to persist, naturally this will negatively impact the British pound, consumer confidence, and even the Bank of England stance. Right now, markets still feel that there's a possibility of the Bank of England moving forward with a hawkish stance, but no-deal Brexit could cause the central bank to turn more cautious. And if we do have a situation where inflationary pressures start to skyrocket in the UK due to a weakening pound, this would all compound to the downside. So overall, when we're speaking about Brexit and the uncertainty, it's just a lot of negativity. And for investors to restore market confidence to the British economy, what we'll need to see is more clarity on Brexit. We need to see there's a reassurance that the UK could weather the upcoming storm. Also, political stability. The next leader, the next person to replace Theresa May, that will play a key role in the market confidence. Would the person be a, hardline Brexiteer? Would it be a person who wants to actually prevent from the UK from crashing from the Europe? Investors to restore market confidence to the British economy, what we'll need to see is more clarity on Brexit. We need to see there's a reassurance that the UK could weather the upcoming storm. Also, political stability. The next leader, the next person to replace Theresa May, that will play a key role in the market confidence. Would the person be a, hardline Brexiteer? Would it be a person who wants to actually prevent from the UK from crashing from the European Union? So overall, what my conclusion is, even though it will take a very, very long time for confidence to return back to the pre-EU referendum levels, if we start to see signs of clarity, this could start to help sentiment.
Very interesting. Let's get your final sentiments, Lukman. Your thoughts in terms of the way forward, especially in terms of what the markets are waiting for right now. As was highlighted by Professor Erasmus, it seems like a no Brexit deal is not a possibility here. Your thoughts around that in terms of what the markets are expecting, and also in terms of what they're looking out for a sense of stability.
Right now, the main thing is uncertainty will remain the name of the game when we're dealing with Brexit, and Theresa May's resignation has really, really fueled this. In regards to the possibility of a no-deal Brexit, this goes back to the always expect the unexpected. Hypothetically, if we do have a situation that Boris Johnson becomes the new Prime Minister, given how he's been a hardline Brexiteer and the deadline comes on October the 31st, we have to keep in mind that the European Union may be losing patience. We've been going back and forth and back and forth. So based on this notion, this is where we can see the pound trading where it's trading right now. Overall, though, when we're looking at things, the overall sentiment towards the British pound is bearish. And until we have any fresh clarity and insight to the direction of Brexit, we're going to continue to see volatility in the British pound. Right now, the British pound is highly sensitive, and the next round of big movements should be most likely when we know who the new Conservative leader and Prime Minister of the United Kingdom will be.
All right, that's how we're going to wrap up the conversation.